Hey, what's up every Friday, everybody? TGIF, it's Friday. Hopefully you all had a good week heading into this long weekend. Just wanted to recap since we are now moving into the month of September. A few things for the new month here. First of all, on your screen I have the indexes. So up here in the top left is the IWM or the Russell 2000. Over here in the top right is the QQQ. That's the the Nasdaq 100 tracking stock. Down in the bottom left-hand corner, we have the TLT. This is the 20-year bond tracking stock or ETF. And in the bottom right, we have our trusty SPY tracking our S&P 500. So the main thing I wanted to talk about today, you can see Russell 2000 shows no signs of stopping. A lot of people often think of the Russell 2000 as being a leading indicator for the S&P 500. We'll see if that turns out to be correct. If the S&P 500 finally ends up breaking out of this trading range and moves upward, we will see. The technology index had a really great run and then made this little hump right here. We'll see if it resumes that upward trajectory. And then, of course, bonds here, we're just kind of stuck in this range between, well, for the TLT at least, 138 to 140-ish. So we'll see if we can resume our trend upwards. You know, a lot of people are talking about rates being lower for longer. We'll see if the Fed is able to raise rates this month, but a lot of people are saying that it's unlikely, especially in lieu of the jobs report and the ISM, the manufacturing data. Although the manufacturing data was a little bit better than expected, the jobs numbers were really just in between. They really didn't help us out all that much. So the prevailing wisdom before the jobs number was that there was not going to be a rate hike. So the job numbers today did not change our mind with that. So we will see. But I did want to mention, I have this indicator. It's basically three different things, and one of them is more short-term, one is more medium-term, one is more long-term, and they help us determine whether there's going to be a downturn in the stock market. And I do want to tell you that there should be some caution because the short-term indicator that I use, which is made up of primarily a lot of government information, you know, the government publishes a lot of information on the stock markets between the FTC, the SEC, and the Federal Reserve. They do a lot of research, and it's actually published on the internet. So you can search all their sites, and they'll tell you a lot of information. You know, last month we were talking about how banks are making it harder to loan right now. Credit is getting a little tighter, which is one indicator of an upcoming recession or an upcoming downturn in the market, because when credit gets tighter, there's fewer transactions, GDP decreases, blah, 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 and so on and so forth, and the market declines. So a lot of my indicators now are showing that a lot of the smart money, a lot of the big money, a lot of the movers and shakers are starting to put on a lot more short positions. So just wanted to make you aware of that because it could be a warning sign for an upcoming downturn. And, you know, a lot of people are calling for, well, not a lot of people, I guess some people are calling for a small downturn, like a 4, 5, 7% downturn, maybe to the 2050 level on the S&P 500 or the 2010 level. And that's assuming we even get through the 2134 level, which was the previous high. That's going to be a large area of support right there. So even if we get down to 2134, you know, we may see a decent amount of support there. If we break through that, then it'll be really interesting. because who knows? Who knows what will be going on? September is often thought of as the worst month of the year for markets. So we'll see if that bears out. Um, so since this is September, the first Friday, second day in September, I wanted to go over those my little index for you. It's generally pretty good, but that's only one out of the three factors in my index. So I'm not looking for a huge downturn, but maybe a little pullback coming up here at some point. And to be fair, the short positions that have been on have been increasing over the last several weeks. So it's hard to say exactly when this possible downturn could happen. But we'll see. The market hasn't really done much at all over the last month and a half, so it may be about time. So just wanted to make sure you guys had that warning, just so you guys keep your eyes open, just in case. I'm not sure that I would necessarily hedge anything right now, but the VIX is less than 12. It would be a good time to buy some protection. Anyway, okay. Well, I hope you all have a fantastic Labor Day weekend, and I will talk to you on the flip side. Have a good one. Bye-bye.